This
So
conference will now be recorded.
thanks, Mackenzie. All right, so how we got our data. The data that we're presenting to you, we obtained ourselves. The population was senior executives and owners of privately owned companies in the commercial aviation supply chain. The sampling was done using our proprietary database, our CRM, our contact list, and it was all done electronically through standard email systems. We then used some proprietary third-party software to collect that data. And this was all done over the period of May 2nd to May 15th. And we, through that, received 94 responses that we'll now share with you that data. First, what we were asking about. The survey was literally asking about PPP loans and liquidity relating to that activity amongst this 94 sample. And just, I'm sure we all know this, but just so that you know that we're all on the same page here and we were asking the same questions. PPP loans were made available to U.S. companies with 500 or fewer employees. Those companies had to be in existence as of February 15th, 2020. And as of April 15th, 2020, the PPP program was launched through the SBA, through their 7A loan program. And just for a little tidbit of interesting history, the SBA traces its roots back to the Great Depression, part of the economic programs to exit the Great Depression, and then migrated to actually a program to provide guidance and funding for small contractors to the Department of Defense as it was stood up during or after World War II. So actually pretty interesting history there, and a lot of it relates to aviation and aerospace, but this PPP money came through the SBA. The guarantee program provided up to $5 million per borrower. And importantly, Section 1106 of this act provided that this loan was actually fully forgivable under certain conditions, which was effectively paying payroll and not having any RIFs, reductions in force, during the period of time. Very quickly, some of the details. This is right off the Federal Register, the actual act itself. The loan amount maxed out at 2.5 times your aggregate monthly payroll. Payroll was defined as a compensation plus vacation, family, sick leave, employer paid health, insurance, retirement benefits, and state and local taxes. The maturity is 2 years. The interest is 1%. Again, that's if it's not forgiven. The entire loan is forgiven if at least 75% of the loan is used for payroll over the 8-week period following the date of the loan. And then the balance of 25% must be qualified. And those qualified expenses are interest, mortgage obligations, rent, leases, and utility payments for obligations that were contractually entered into prior to February 15th. Now, just a quick side note, I was reading this morning from the AICPA, which is the trade association lobbying group of the accountants of this country. And they reported that although the guidance from Treasury and SBA is relatively good and getting better, they again announced this morning, well, actually it was over the weekend, that there's simply not enough clear guidance to really understand what these expenses are. And I'm sure we all still have questions, and this is all in flux, like our world is in flux at the moment. But there's a basic understanding of PPP. It was for 8 weeks of liquidity to prevent companies with under 500 employees from having to lay off workers. It was not just dedicated for commercial aviation, but obviously that's exclusively where our 94 sample was. Comment about supplier liquidity. This was not in our survey, but this is public information. The TSA is now reporting daily throughput, meaning the number of passengers TSA is screening in this country. And throughput as of the 16th, which was the latest date we did when we wrote this up, 90.8% of the prior year. So, right, so we're operating at 9.2% of last year's capacity. In comparison, when we look at the 9/11 attacks of 2001, the immediate reduction in air travel, as soon as the airspace was legally opened back up, the reduction in air travel was 31.3. So we are looking at something like a threefold immediate reduction in traffic versus 9/11. General comments about supply liquidity, and then we'll share with you all the stats we got from the sample that responded to our survey. Obviously, I think all of us on this call are hopeful this pandemic will end or come close to an end very soon. And we all, I think, understand that it's some combination of medical treatments, expanded testing, lowered transmission rates, and a vaccine. Somehow those combine to get us out of this. And while I am very hopeful that all of that will happen at lightning speed, I think we all recognize that some level of time or some amount of time is going to be required for all of that to take place, especially the vaccine, but even medical treatments. So it's going to be a long haul. And obviously there's the psychological impact, not just the scientific impact, that even if it's safe to fly, will the traveling public feel comfortable flying? And that's above my pay grade, but I very much want to talk with you guys about what that looks like. So the data. So first question we asked of this audience was, have you applied for the funding? And as of the dates that we showed you, May 2nd to May 15th, 54% said they had applied and received. 15%, said they'd applied but not received, and 31% said they'd not applied. Reason for not applying, our sampling wasn't rich enough to know what that means. I can speculate that it means that some of those executives and owners were dealing with more than 500 employees and some not available. Could be that some opted out of it, didn't feel that it was warranted to do that. We don't have the data. The comment on the yes but not received, as I'm sure many of you saw in the press, I'm just referencing my notes. The first tranche of the PPP was $349 billion. It ran out in 13 days. The second tranche was $310 billion, and this survey was done, I believe, mid second tranche, or actually just pre-launch. So this 15% may be a bad statistic. If we were to go back, we may find another number, but this was the data we collected as of the point in time that the individuals took that survey, which could be as early as May 2nd. What have you done to preserve cash? Now, this is a chart, and make clear that this is a multiple response format, meaning it's not one answer and they all equal 100%. It's what have you done? You can pick all of them or none of them. And so the percentages show the percentage of the sample that selected that attribute. So, for example, of the 94 people we asked, only 5% of those people said they'd closed the facility. 51% of those people said they'd eliminated overtime. And obviously eliminating overtime, I'm sure, makes a lot of sense to all of us on this webinar. Cutting executive compensation, right where it should be. You're limited overtime. The executives should be looking at comp cuts, and reduce marketing expense. You know, obviously no one's going to Farnborough right now, etc. What was interesting to me were two statistics. One was drawing lines of credit, and the second was slowing vendor payments. I actually thought those would have been flipped. I was expecting, and I obviously want to get your guys' input, and we'll talk about it, but I would have expected almost everybody that had available lines of credit would have pulled them down just to have the liquidity in their own name rather than their bank. And that was a little surprising to me. And slowing vendor payments, I realize that the PPP is not for vendors, it's for payroll, but I would have thought that if there was liquidity for payroll, there would have been some liquidity left over for vendors. This is concerning to me. This 39% slowing vendors shows to me that this is a trickle-down effect and that things may be a little rougher than all of us would like, because even though there's PPP flowing into the system for the next 8 weeks, we're already seeing companies holding back cash from their own suppliers. So that was worrisome to me. Other than payroll, what's your largest expense? This was not surprising to us. It was a mix of facilities and suppliers. What's worthy of note is that the PPP allows 25% of your loan amount to go towards rent and interest and mortgage and utilities that are qualified. Some of that's still not fully understood. AICPA is again asking for more guidance from Treasury, but let's just call it all facilities. And not surprising that 42% of the expense other than payroll, largest one is facilities. But look over here on the left side of the chart. I think you guys aren't reversed on this. I think it's your left, but the yellow 46%, those are suppliers. And so if that's your largest expense and you don't have funding for it, there's going to be pressure on there before there's pressure on facilities. So I'd rather be a landlord right now of real estate owned by a commercial aviation supplier than be an outright supplier, at least for the next 8 weeks. I think there's relatively good liquidity. Question that we asked the audience was, if things get worse, what would you consider? Again, multiple response format. Drawing lines. Now this made sense, but I think our audience was contemplating future draws of lines and not drawing them as of the time we asked the question. New loans, we'll talk about that in a second. Money from owners. This one actually really surprised me. I'd love your thoughts on it when we get to the discussion, but this is very encouraging to me that the owners of these businesses, many of which are either private equity owned by small private equity firms or by individuals. Remember, these are all companies with under 500 employees that are getting the PPP. And so these owners are standing back and saying, if my business needs liquidity, I will be the financier of last resort. That's a very strong statement, very encouraging that these owners are prepared to step up and help their companies survive. New equity financing, not very attractive, makes sense. Restructure the debt. You've got a good relationship with your bank. You need a 6-month extension on something. You pick up the phone, you ask your bank. That's nothing wrong with restructuring. Selling assets, to be careful. These are short form descriptions of our questions. The question we asked under sell assets was lengthy, and it was, would you consider selling assets that are not core to your operation? And the answer there then was 34%. Other was a smorgasbord. It included lots of creative things, many things we didn't even think about, but there were a lot of creative other things to do to create liquidity. Coming back to new loans, I am concerned anecdotally. I've got no real evidence, but anecdotally, talking to creditors in the sector right now, I'm worried that new loans will be hard to come by. And we were in a conversation with a potential borrower yesterday, and the question was, can I borrow? And my numbers last year were these, can I borrow? And our anecdotal comment was, based on last year's numbers, yeah, you meet all the requirements for a standard bank financing. But if you look at your financing for the past, your financials for the past 2 months, no, you don't qualify. Cash flow is not sufficient. Assets may not be sufficient. You're already leveraged. So I'm concerned about the availability of fresh debt from the commercial banking marketplace. And this is the last data point we've got, and then I got a closing slide, and then we can do what's most fun, which is have a conversation. Last data point. And this is what we put out in our social media immediately after we started to collect data. And this is pretty close to the way it started. This didn't change very much over the last few that came in. Are you worried about the survival of your company? I was shocked, actually, dumbfounded, that effectively 3% of this marketplace is worried, and the rest is not. Now, we need to be very careful with the words, and we were careful in crafting, we hope, our survey. We use these exact words. Are you not worried at all? Are you slightly concerned? Are you concerned? Are you very concerned or extremely concerned? Those are the exact words we used. And so the yellow 30%, one can debate what that means, but it is the word. And 30% did click that box. And this was a single answer format. You get to click one box. 30% of our 94 people responded back and said they're concerned. But 67% said they're either not worried at all or only slightly concerned. And based on just the TSA stats, being down 90.8%, I don't get this. And I mean, I just tell you, I don't get it. But anyways, it is what it is. It's the data point we collected. Closing thoughts. So I'm a big fan of fact versus fiction. And so this is Bill Alderman's personal thoughts. They're not based on anything factual. It's just my personal anecdotal thoughts. So I'll just say them and then we'll open the discussion. Medical science and economic activity may not be able to advance fast enough to enable our industry to generate positive cash flows. I think that's true, but it's not based on any facts. That's just my concern that we're not going to get out of this anytime fast because science and economics aren't going to get us there. That's my worry. And if cash flows remain negative, and if the PPP funding only lasts for 8 weeks, which that's a fact, there could be more funding, but the current level of congressional funding is 8 weeks. Then in 8 weeks, I think we're going to have a problem. And so that's my closing thought, that unfortunately, I think this pandemic is real. It is causing people to not get on airplanes. And if that is sustained and this 8-week cash flow or PPP funding runs out, that means that this industry, this supply chain is going to have a crunch for cash sometime starting in June. That's everything I wanted to say, and I'd love to turn this thing open to questions and answers. And I guess Mackenzie, you're gonna try and lead us in that process.
I am. So we have roughly right now we have 5 anonymous questions. So if anybody wants to send any questions in, please click what looks like a chat bubble, and we will hopefully get to all of the questions. So we will start with the first anonymous question. Why do you think so many people are not very worried?
I wish I had a psychology degree. I think the reason may be that who these people are. These are entrepreneurs. We didn't go out and poll people on the street. We polled owners and chief executive officers of companies in the commercial aviation supply chain. And they're a tough crew. They have guts and they understand risk. You know, a lot of these companies are manufacturing or repairing aircraft parts that if they fail, people die. I mean, these entrepreneurs understand risk, they manage risk, and they make parts and repair parts, and people don't die because they're really crafted at managing those risks. I think they view this pandemic as something sort of not much different than overhauling a jet engine fan blade. You got to get through it. You got to manage through it. Yeah, there's risk, but you manage those risks and you get through to the other side. So I guess it's a psychological answer that this is not a group of normal people. This is a group of people that can stomach risk and work through it.
Okay, great. Next question. Given that PPP funding runs out around mid-June for most companies, do you expect to see liquidity problems increase later in the summer?
Yeah, sadly I do. Yeah, that's just a short answer. And I wish I could say that I don't see it coming, but I think PPP funding was the right idea. Forget politics. It was the right idea for the economy, especially for commercial aviation. Might there be a special PPP funding for the commercial aviation supply chain? Could there be another act of the federal governments that help? Yes. But barring an act of the federal government, I think the supply chain hits a liquidity crisis in the summer, late summer.
Okay, great. Many said that they would borrow money if they need it. Are the banks willing to lend?
At the moment, I think they are. Now, remember, the SBA fund, the PPP funding is literally, you go to your local bank or you go to Wells Fargo and you apply for a loan and Wells Fargo lends you the money. The difference is Wells Fargo has zero credit risk. They get paid an administrative fee because the US Congress and the US taxpayers have guaranteed that loan in its entirety. So that's for the purpose of the SBA. They facilitate that guarantee flowing through. So the day the PPP funding runs out, you go to Wells Fargo and say, I need a loan. I'm worried Wells Fargo, to the average small company that applied for PPP, Wells Fargo is going to say, I'd love to lend you money, but I need FDIC insurance, and to comply with the insurance, I can't lend if you have negative cash flows and your collateral doesn't meet these requirements, and I don't get a personal guarantee, or your personal guarantee doesn't have enough collateral behind it, I can't lend you the money. My concern is that the banks will be actually prevented from funding this industry.
Okay. When do you think the supply chain will become profitable again?
Oof. I know that a lot of these executives, people on the phone with us right now, are working really hard to balance the staffing, the intellectual knowledge, the tribal knowledge, and right sizing. And it was announced, I think this morning or last night, Air Canada is intending on laying off 50% of their workforce. Now that's Canada, it's one example and all the rest of it. But if this industry contracts the way it might, and right now it's down 90.8%. I mean, I want to digress just for 1 second because I sort of want to throw this in here. This was off one of the news wires this morning that said the stocks and airlines had ticked up in the past couple of days, and here's what it said. For the week ending Saturday, May 16th, an average of 205,000 travelers traveled in the United States through TSA checkpoints, which is why the market went up. And the reason the market went up is because while that's down 91.5% from a year ago, while that number is 91.5% down from a year ago, it's up from previous periods. Okay? So the market is desperate for some good news in this sector. The airline stocks want to go up. And when travel goes from, I guess, 90.8% down, no, it was more. But for the week, it was only down 91.5%. I guess the week before it was more. I don't know when this industry becomes profitable. My hope is very, very soon, but it's going to require a massive restructuring of the industry that has a lot of fixed costs and a lot of fixed overhead. And so, long answer, I'm going to say it's 18 months to 2 years before the industry is regularly not losing money.
Okay. Is it likely that new aircraft production may be substantially reduced for a prolonged period of time given, 1, Zoom users are learning business travel is not always required, 2, many who do fly will prefer business jets and charters over big airplaners, and 3, will low fuel prices refurbishing older aircraft become more economical?
Somebody's cheating and asking 3 questions at the same time.
We can take them one at a time if you like.
All right, let's do them one at a time. Give me the last one first.
Okay, great. Will low fuel prices refurbishing older aircraft become more economical?
So I think what will happen is the market will be less sensitive to fuel burn. Oil is dirt cheap right now. I'm not an oil expert. My guess is oil will stay relatively cheap for some period of time. We won't see $100 barrels of oil or $7 jet fuel for a while. But that's not the driver, I think. The driver, I think, is going to be the engines, the landing gear, other major LRUs. And if I park a bunch of airplanes and I need to do heavy maintenance on the airplane I'm currently flying, I'm just going to go park that and take another one. So it's like, if I have 7 Maseratis and one of them breaks a transmission and I'm a little tight on money, I'm not going to fix my Maserati number 7. I'll go pick up Maserati number 1 and drive that around town. And so I don't think it's a question of older versus newer. It's going to be a question of how much time is left on the major rotable parts. And if that airplane is all good to go, I'll just fly it. Or you know what? If it just got weird for a while and one of the motors has low time and one's high time, I'll just swap a motor. And so what I think will happen is we're going to see a lot of movement of aircraft and equipment, but not a lot of heavy shop visits for a while. There were 2 other parts of that same question.
There were. So I'll read the second part and then we should move on because we have a lot more questions. But is it, I'm getting more questions and I'm losing where I am. Is it likely that new aircraft production may be substantially reduced for a prolonged period of time given many who do fly will prefer business jets and charters over big airliners?
Okay, so we're going to be quick, and guys, I'm going to try and end this by our goal was 2:45, and because I really want to be respectful that everybody on this call has got a lot of things they're doing right now, and although I love you all, and this is really good, you have more important things to do than watch me talk for more than 45 minutes. So we're going to go real quick. The answer to that question is, Mackenzie, yes, I think production is going to come down. I don't think it'll come down forever. The one thing that I will say is that when I was asked 2 years ago, will production levels go up from here? My comment was anything's possible, but if I was betting, they will go down because there's more room to go down than go up. And so my comment is the opposite now. I think production rates are going to get cut. They're going to get cut dramatically. They're going to be down for a period of time. They will go back up. They will not stay down forever, right? This industry is a cyclical industry of discretionary consumption. People like to travel the world. There's 8 billion of us. If you want to go halfway around the world or even only 1,000 miles away, the best way to get there is by airplane. As long as I'm not worried I'm going to die when I do that by bomb or by boogeyman or by pandemic, I'll do it as long as I can afford it. And so we're going to come back. People will fly. Things will be fine, but people are not going to fly when either they're broke or they think they're going to get killed if they get on an airplane. So production is going to get cut in the short term. Long term, it'll come back. Next.
Okay. Do you see an uptick in consolidation of companies driven by lack of liquidity of the current owners? Will it drive a fire sale?
No. So my experience, having done this a few times before, is when this industry goes into a downturn because it is discretionary. And remember, we're talking commercial aviation. We're not talking military. Commercial aviation. So when there's a downturn, the industry loses money, and owners do predominantly two things, although everything's possible. They fight through it and they put their life savings back into it, and they do whatever they need to do to survive to get back to profitability someday. Or they just say, you know what, I'm 68 years old, I don't need this anymore, I'm shutting my doors. Now, there is always a huge amount of grayness between that. And there may be the owner who's 61 who says, give me some money and I'll get out. Or the owner that says, I need to do whatever. But for the most part, my experience is that when this happens, the last thing an owner thinks about is, oh, now's a great time to sell my business now that it's worth 10% of what it used to be worth. That's just not how people behave. So I do think there'll be consolidation. I do think market share will shift. I think that the 68-year-old person that retires and just closes his doors, that machinery and equipment will get bought by some other company and they'll start doing that work and they'll get that market share. But this idea of fire sale and everybody's going to sell their companies because they're broke and everybody else is going to take advantage of that, this is not my experience of human behavior. People don't just throw in the towel. That's not what these kinds of people do.
Okay, next question. None of this turns around until people start flying again. What more can the airlines do to instill confidence?
They can pay a lot of money to pharmaceutical companies to help their scientists come up with cures, treatments, and vaccines. That's all they can do. There's nothing they can do. They just got to sit back and wait. It's like saying, you know, I'm in the newspaper business and I want us to go to the moon. Well, you know, sit around and wait. We'll get there someday and you can write about it. There's nothing we can do. We're not scientists. We're not virologists. We're not epidemiologists. And so those people have to save us.
What are some of the creative financing solutions you have seen during prior recessions that ended up being a win-win for all parties? Can you give any examples? Do you have examples that ended badly for any parties involved?
Yes, and yes. I've never seen it this bad before, to be fair, right? So I can't say that after 9/11, here's what we did, and it'll work this case, because this is worse than 9/11 and different. You know, you put TSA up and you put a person with a gun on every flight, and people start to fly again. You know, the guy sitting next to me has a gun, and the person sitting next to me on the other side has COVID. The gun isn't very helpful to me, right? So this one, I don't think there's a magic sanitizing, cleaning. So this is prolonged. So back to the question, what can we do financially? What we can do financially is make an informed decision as an owner of when are my cash flows going to go positive. So you look and you forecast and you say, look, demand of this, and I overhaul flight controls. And in the good times, I was doing 15 flight controls a week. And I think now realistically at 10% of capacity, I'll be lucky to do 4 flight controls a week. Can I make a profit at 4 flight controls a week? What do I need to do? And so for me, having been through downturns, not like this before, but downturns, get your operations and your costs to break even, whatever that has to be. It may be ugly, it may be really ugly, but get to break even so you can be around in the future. If you are simply going to try and lose money and then raise capital in this market to get through that, you're going to just burn capital and then you're not going to have any left. And so I guess my number one advice that I did learn from the last go around, but to a much lesser degree, was get yourself to break even, whatever that means, as soon as possible.
Do you see suppliers folding entirely, or is acquisition by larger, more financially stable groups more likely?
So here's the thing about an acquisition, right? You should acquire something when you think it'll give you a positive rate of return. Buying a company is no different than buying a forklift or building a factory. Is it a good investment? And so if a company has failed because it doesn't have any revenue and you buy it, what have you gained? Now, you could argue that you've got intellectual property and you've got tooling, and in 3 or 4 years, that'll be really valuable to you. So you bought it at a discount today and you're going to just warehouse it for some period of time. That's brilliant. But it goes back to the same cash flow analysis we've always done, whether it's a good time or a bad time. Build rates are 40 a month or build rates are 0 per month. When you deploy capital into a merger or acquisition, what are you buying, right? And is it a good use of your cash, and does it have a good IRR? And I do think there'll be some opportunities, but if you're buying capacity in a marketplace where supply and demand are out of balance, I'm not sure what you're buying.
Great, we have 2 more questions as of now. So, as government funding subsides, why don't you think that employees in other industries will take the risk of flying again so their companies can stay afloat and they continue to get paid?
It's a great question, and again, I don't know the answer psychologically to the human behavior of flying. Look, people are flying today. 200,000 people in this country got on flights through TSA checkpoints, right? More than 200,000 now are flying a day. So clearly, some people are already comfortable flying. My concern is that without vaccine or treatment or something medical, there won't be enough psychological behavior of people to make this industry profitable. And so that's where I come back, Mackenzie, to that question, which is whatever it takes to get people comfortable is going to work. Whether it's painting the airplanes purple or it's getting a vaccine to everybody, the bottom line is not a vaccine, right? I mean, the bottom line is, do 2 million people a day want to get on airplanes and fly around the country? And right now, too many people are scared to do so. So if your boss says to you, hey, you're in sales, get on an airplane, fly to Los Angeles, go meet with 7 companies and sell our products. Well, if you're comfortable doing that as the employee and your customers want you to visit them and take them out to lunch, I don't care if there's a vaccine. I care that those people have the behavior that they're willing to do that. My fear is that they will be afraid, and without a vaccine or a really good treatment, too many people are going to say no thank you, and so that 2 million number that we need will only be 600,000, and at 600,000 we can't make money as an industry.
Are aerospace OEMs build requirement schedules to be trusted?
I don't think they commit fraud. I don't think Boeing maliciously says we have orders that they don't have. I've been through this now 3 times, real corrections exogenously in the marketplace. And the one lesson I learned, I was at GE as a young officer, and one of the Asian airlines, the name doesn't matter, had an order for 52 747s and their engines, right? And they each had 4 apiece, so it's 200 plus spares. So it was a big order for a lot of GE engines. And it was a backlog. It was a firm backlog. They had them on order. And then I think it was Lockerbie that crashed, or it was 9/11. It was Lockerbie, and the order was not canceled. It didn't get canceled. It got deferred for a minimum of 7 years. Okay? That was the contractual agreement between the airline and GE, was a legal deferment for 7 years, not a cancellation. So to me, a backlog is they're good. Look, the airline ordered the airplane. It's a backlog. But in a nanosecond, the airline will cancel that order if the airline doesn't have money. What's Boeing going to do today, right? Let's say that Air France had 20 A320s on order. Is Airbus going to sue Air France because Air France isn't flying and has no money? Well, if they do, they may get some money out of Air France, but Air France will never, ever again buy another A320 in the history of the airline. So, of course, these order books aren't real, meaning can you sue over them? But they're very real. They're not fraudulent. Airbus and Boeing don't make up numbers. But to think that these are contractual obligations that in the event of a pandemic, they don't get canceled, that's silly.
What will the impact be on lessors who have grown to nearly 40% of the order books? Is it the same in all regions?
I think the question is, are the leasing companies going to become unprofitable, and are there certain regions of the country that will be more profitable? I think is the way I'm going to answer the question. And the great thing about aircraft leasing is that unlike even leasing oil tankers, which are pretty commoditized and fluid, you can pick up an airplane and move it across the country. Even if it's a small airplane, in a day or two, you can move it. So leasing is global. An A320 that's leased in Asia is an A320 that 2 days later can be flying in Africa or Europe or wherever. So I don't think there's anything unique about geography for leasing companies. There's a difference of fleets. So one leasing company may have a lot of long-haul aircraft, and the other one may have short-haul aircraft or turboprops. That matters a lot, because different sectors, I believe, of the fleets will fly differently during the recovery from the pandemic. But to say that we're an Asian leasing company focusing on narrow bodies and we're a European company focusing on narrow bodies, I don't think that matters.
Is there a material difference in timeline from companies getting profitable versus running out of cash?
That's a brilliant question. Whoever wrote that, you get a star and an apple. They are related, but if you get to break even, you can't run out of cash, right? I mean, look, all things being equal, break even is an income statement concept, and cash flow is much more complicated. It includes the balance sheet. So you can be profitable and run out of cash. You can have losses and generate cash. So we can get really complicated here, but for the most part, let's just say cash. When you are generating a lot of cash, right, you're profitable. That's the concept. And when you're break even, let's talk about on a cash basis. So if you are break even on a cash basis, you can't run out of money. And yes, I guess the technical answer to your question is, under sophisticated GAAP accounting, you can be extremely profitable and have no cash, and the exact opposite is true. And what I like to say to my clients right now is, forget all of your accounting stuff, pay attention to your taxes, but it's all about cash. Do not run out of cash.
Okay, and I know I've said this before, but this is our final question as of now, and we have 5 minutes, so take your time with it. With the double whammy of COVID plus 737 MAX, 400 undelivered airplanes in inventory, can Boeing survive?
Great question. So I think for non-microeconomic reasons, for reasons other than microeconomics, Boeing has to survive, I think, is sort of where I'm at. From a microeconomic perspective, Boeing should be allowed to fail. Its business model broke. It made some mistakes. The market turned down. It should be allowed to fail, and its employees can go elsewhere, and other companies will make airplanes. From a national defense perspective, the U.S. Department of Defense and the federal government should not let Boeing fail. From a economic perspective, Boeing being one of the largest employers in this country, one of the largest exporters in this country, and its employee base being skilled labor, I think from a macroeconomic policy perspective, Boeing should not be allowed to fail. So the answer is 2 out of 3. The federal government of the United States should guarantee and make whatever is necessary, bailout like AIG, bailout by GM or like Ford, whatever the government needs to do in the end. Boeing should not be allowed to fail. At the moment, it's getting capital from the private sector. We all just saw that take place. I think the reason they were able to get money from the private sector is that people think, like I just said, that Boeing can't fail, so there's a de facto government guarantee, although not contractual. So long-winded, I don't think Boeing's going out of business.
Great. I think that concludes the questions. Oh, spoke too soon. More of a comment. Okay. Well, thank you everyone very much for your time. To conclude, if you have any thoughts on topics that you'd like Alderman and company to discuss next, please send Bill an email since we're in the midst of planning our next webinar. And I've had a few people reach out about receiving a recording of this, and I will make sure to send that your way. So thanks everyone, and enjoy the rest of your day.
Bye, everybody.